All right, ladies and gentlemen, I told you when I tell you about your trading pattern and monitoring your trade, and why I encourage most of us not to be jumping into too many trades at a time. And of course, unless and if you have been able to swing a trade for a while, and then you're in a very nice profitable level, then you can be able to look at other opportunity and of course want to add up is better. But as far as day trading is concerned, you have to part-time or about trading session, you faced a particular trade. Number one rule we have told them about DCA, part of DCA, right? And multiple positions, exactly in your Forex or synthetics or whatever. So instead of one position, you do like 3, 4, 5 positions with small lot size. That's going to help you a lot to make a lot of money. But if you just do one big lot size, well, if you do big lot size, that means you are not going to waste too much time. You just do a milestone to a milestone. Now, we were on gold and we're on EU. EU have done well, right? From where like what the previous video I did yesterday or something, right? What the previous video I did yesterday or something, I actually caught an entry from here, because I told you about the high and where you measure, we measure, told you a support and resistance strategy. And then what we got was that we mark this point, this guy here, and we mark it this way. And we said this was a fake out. All right. We said this was a fake out. Now, after the fake out, of course, there was no session probably that time. Or even the session is already going down. So, Anand told us that I probably will find a short position here, targeting some places down, whatever. But I said, the best is that having gotten this, you better have to go to a lower time frame. But now you're going to lower time frame, like 5 minutes or 1 minute. We're able to arrive at something like this yesterday. We now say this is a place to take profit. So let's go to 1 minute. Okay. So this is 1 minute, right? Remember, we're the one that marked this point as a resistance. Okay, we even said we got a sale here for 1 minute on and then take profit here, and we got that. We now say another rally, fake out, and then trade rally. We now say getting into this market using this and short, even here or perhaps here. And I told you that I'm not going to take my stop loss to be too long of this week, right? I'm not going to take it there. I'll only take it here. And then, so you are in multiple positions. Sorry. You are in multiple positions. So if you look at your MACD, of course, this is 1 minute. It doesn't really make any much money as it were. So, but you want to take profit here, and then you want to still see, then you now push up to 5 minutes to be able to see a more clearer picture. Now, once you come back to a clearer picture here, this is what you will have found. Makes sense, right? You will have found this. Market was doing what it was doing. Your market is still secure and was trailing down. So it continued to trail down, right? Now, you're now targeting the top of this. But all of these points, this, they are called liquidity. So these are places and a swing low, market will get to unbounce. But fortunately, the market continue right. And then because you entered the market that yesterday, market still continue to rally. So that means in that case, you are now looking at this point, which is the Asian low of the previous day. So market continue to do what it's doing. You're fine, right? And you are still trailing. Though you have taken some profit. Don't say, I want to trail for life. No, you can't trail like that. Market is still doing what it's doing. Now we move up to 15 minutes. Now, if you look at your 15 minutes, so look at this MACD cross. That will have given you a picture here. It was the previous MACD cross, a bounce, and then Here we go. So there's a cross of MACD. And that is to say, market still continue look at another swing low here. And fortunately, let's look at it up here. These are swing low. So your market could be targeting here. And what happened? You now have a demand zone down here. Sorry. So here you have a demand zone. Now, but the markets had gotten these, grab all the liquidity, are now returning back. Though you still know that this is a downtrend, right? Temporarily, because of the activities, market is bouncing up. Now, if you check your MACD, you're going to see something that your MACD was already crossing, painting this, even though the market was struggling, but already know that these are multiple weeks, which is not strong downward again. Then you are now going back to your 5 minute, probably to find an entry. This is a counter entry. So your entry, wherever you find it here, below the lowest swing low, and then you are just stacking it up. Eventually, the market may got up back here. You will have made some money. Now, so that's why I say staying on an instrument you are trading part-time is very, very important. Rather than jumping around trying to meet up with these, you will miss out big thing you're supposed to cash in a particular this thing. Now, so now I've trailed my stop loss for this guy. So the same thing on gold, right? The same thing on gold. So we could see gold when we say we're longing, right? Maybe gold was pumping from here. Okay. And I say, oh, wait till for London market open. And London market open was like a push-up prior to market open of London. And what do you have? You have a demand zone, which you want the market to come here. Now, sometimes I always tell us that if a demand zone, multiple demand zone created on the same direction, like this is a supply zone rather, another supply zone, it has strengthened this to be stronger than this. That is to say, the direction of the market we are facing is strong. And that gives you an aim. Now, market sold down here. We expect it to come to this demand zone. So understand this, which is, but these are liquidity, these are liquidity, these are liquidity, these are liquidity. So probably grab up to this. And all of a sudden, you start seeing your MACD trying to turn around. So when your MACD trying to turn around on 15 minutes, you want to go down to 5 minutes, even 1 minute to find, remember we said 15 minute higher time frame setup is peak in 1 minute lower time frame entry. So, but you want to go down to 5 minutes to still see a kind of direction, which is very beautiful. So look at what you are unable to see on 5 minutes. And now, why do I need to be interested in this? There was a fair value gap left behind on this. That's why I marked this. Your MACD had already crossed. Here is your MACD. Okay, so this is your MACD crossing. And you have a very fantastic engulfing candle. All you're waiting for is a pullback after the engulfing, probably here, and you find an entry. If you find an entry here, that means you are looking at this point saying, hey, I'm longing this guy from this place, then targeting this place. Okay, that's your target. Even when your stop loss is here, but that's too big because this is a counter trend. But the market continued to move, however, and of course, your MACD too was moving. And you can now see, if you go to 1 minute, you probably will see the structure faster. Good. This is 1 minute. Here we go. So it's still almost the same, but on your 1 minute, you have found an entry perhaps here, right? This is the high that created this low. Now, the high that created this low is high. Now, this is a low. And now a high was created. This is a low. This is a higher low than this. So if this is lower low, this one is a higher low. You actually want a pullback before you enter, but perhaps most time when the market actually grab this, you don't expect that you are going to double bottom. Are you getting it now? So with this, you've probably found an entry because you are targeting a particular place up here. That means your entry will have been here. So let's take off this. That's why trading only one instrument per season is very, very important. So this is a pullback, and after the pullback, market was engulfing, going up. This is your market. So targeting here, so your stop loss will not be too big. Okay, this is your stop loss. Now let's navigate to 5 minutes. You are going to see the structure more clearer. Can you see that now? So you cannot extend it out and the market give you what you want. Very simple. Okay, it's my trade must have about to close. Okay. Oh, this one. Woo. Oh, about to close. Okay. 51. Okay, this one has closed. It has dropped the profit. Nice one. Nice job. Nice job. Nice job. Nice job. Nice job. Bravo. So now this is this. This continued to soar, and then you have actually trail it up to make money. When you get there, don't be convectors. It's actually pushing up. Exit and wait. You hear me right? Exit and what? And wait. So when you now exit and wait, you know you have a bias to enter a short from here. Now you now want to see what the market want to do. Ordinary, look at your MACD. On 5 minutes was already turning. Even if you go to 15 minutes, your MACD, though, was reducing strength. But because you have an attention there that this market had created a gap, which was this to this. Now, most time when I'm entering my fair value gap, this is what I use. This is the strategy I use. Very simple, right? Now, you can see now it has come to this demand zone. You have to be very careful. At this point, the market has capacity to turn back up or to break this demand zone and grab this low and still pump back. So, but you are very careful. But the kind of candle is printing, you have to watch. You know you are having a trade running. Of course, you have taken some profit. That's why you do not one position, but at least two positions as it were, right? Now, this is the issue. The issue is very simple here. Now, getting to this point is that you're already seeing that, okay, maybe you probably, let me just close all these guys so that you can see what I'm showing you more. Okay. 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 Now, where do I say I have fair value gap? Of course, your MACD was already turning, right? I say I have fair value gap from here to here. This is a gap. Are you getting that? That was so big a gap. That was so big a gap. Now, this guy starts grabbing liquidity. How do you know? I've told you that this is a support. This guy here. Are you following? I'm sure you are learning. I want everybody to really learn. That's why you see me doing this often and often time. All right? This is a support. Now, this guy is drastically going down, but if you return back here, you have to be wary. And that's why you take profit from a swing to swing. Right? So now let's go this. Let's leave MACD. MACD is actually strong down, but that nevertheless, this is another liquidity, right? That is another liquidity here. So we have another liquidity here, and we have another liquidity here. I'm sure somebody is learning something here, right? And another one here. All right. So the market is aggressively doing what it's doing, right? I'm sure you can watch this and learn from it. Now, let's go. We have said the markets, right? We have said, okay, so now this is a point of interest. You should know because the market see a very big week. So if you close back to this range, then we have to be careful. I don't even want to close back to this range. If you close above this, but if you close below this, or probably close where it is, when is the candle closing? The next 7-minute or 15-minute time frame. Then you want to have another candle first open and go up a little, then to sell down. All right, so let's quickly go and look at something very fast and importantly. Now that this guy, okay, has done this, so when it closes the candle and create a new one and is bullish, you want to go to 5 minutes again. But I've just told you that this is a fair value gap. So now let's go. Assuming you have taken profit here, and then you are looking at the market to return back here again, right? This is another fair value gap that was not mitigated before. That's the challenge we're having now. Yeah, so here it was not mitigated. Now, so this is a problem here. That's why I always say book a profit, but the candle has not closed. You dare not enter a market when a candle has not closed. What judgment do you made in jumping into the market when the candle has not closed? Are you getting it now? Oh, I wanted to close this guy. I forgot. It's going to give me a very bad. Oh, I forgot. Shit, this is bad. You can see part of the thing I say, don't do too many instruments at a time. So now, looking at this guy, you are looking at take profit here. You have taken the first profit here, and you have some other position to take profit here. Meanwhile, you are trailing your stop loss. Where should I put my next stop loss? See, these are swing. So if you don't care about what come out of the next one, you can just adjust it below where you entered from. But if you care, you can take it to this swing high and allow it to run. Are you getting it now? So now, if that's the case, very simple. Look at your MACD again. It's still pointing down. Let's look at it. Can you see now? Your MACD is still pointing down. Say no rest for now, but yet, nevertheless, upon how it pointed down, right, you are still going to be extra careful because the market is strongly trying to close at that point. Okay? So now, what should be my next action? Of course, you cannot even trade on the market at all. You can't necessarily be in the market every time. So imagine when you have done this trading today. Imagine when you have done this trading today. This sell down, this buy up, and this sell down. You should be okay. I'm telling you, 3 positions, depending on your account, 3 position, or yes, 3 position or 4 position, depending on, let's say you even use small lot size, 0.02. All right, 0.02. With the 4 position or 3 position sell down here, each should be giving you nothing less than $30. Yeah, so $30 multiplied by 4 is 120. I'm just cutting it down. If your account is small, but if you are trading something reasonable, so you are using like 0.05 times 4, 0.05 times 2 is 0.1, so 0.2, depending. So let's say you are trading with $30,000 or $20,000. You are trading with $100,000, $200,000. You can use instead of using 0.01 or 0.02, you should be using minimum of 0.1. Minimum of 0.1. So if you are using 0.1 trading 200,000 account, 0.1 trading 200,000 account, right? So 4 position. With this coming down here, you are an average of about, each should be giving you around 150 to 200. So if you're giving you around 150 to 200 times 4, that's 600 to 800. So with that, you close to at, let's say, 150 or 100 naira, $100 times 2, that's $200 is secure. Then you are now going by moving the other trailing stop loss. Of course, because you are thinking that the market may still continue to go down. Fortunately, when it just gives you action, you move. Okay. So imagine this position I have closed now. Remember, I told us that the target I want the market to come back to is 2840. Okay. So 2840. Okay. So 2840 is my target. So it's now 28.46. So now, if that is the case, you probably now have enter your market and take profit and return back here and short again. Immediately come here, don't entertain any fear. The only thing you can put your stop loss. If you entertain fear, you won't grab it. That's one of the problems. So as you do to this point, you have taken some profit. So following one instrument, as far as there's volume there, you will go to build your account faster. It is when nothing is happening on this particular instrument, no good structure for you to follow, you now want to pick another instrument. I hope I'm communicating. Very, very important. Okay? I hope I'm just communicating. Can see this guy, I say let's enter before I say the news. Let's forget it because, okay, US 30 is now trying to respond. Yeah, so US 30 is trying to respond. So I think that's going to sell. But I can't join all this thing together. So we're already here. So this is what it is that the market to sell down to 28.40. Now it's 28.44. So 20, come on, this guy. Gold is a bad nigga. Come on, that's amazing. So this is what it is when you are trading. You don't just conjure yourself into unnecessary stress because you want to trade too many instruments per time. It's not worth it. Now look at Euro USD. I was saying that as if you want to bounce, then it's actually gone up and selling down. So let's watch what happened. Now you have used your stop loss to trail stop loss. Yeah, depending on probably where you put your stop loss. I don't know, right? So, but that means the market again continue as it were. So gold, we are going to, almost that 20. Wow. Wow, guys. So this is how it is, and this is what it is, guys. That's what I'm just always showing to you to make money, build up resources. And so when you have traded this one in a day, you should be okay for that day, right? That's it. So please pay attention to everything I give to you. And then, so let us build momentum, all right? Support and resistance, or even imagine when you draw the support and resistance, this is a resistance already. It never got there, and it now weak down. So you are now looking for another kind of entry, and you short it, your stop loss is above here, and the market continue. But if you are combining too many things per time, you won't be able to do exactly what I'm showing to you. Does that make sense? All right. Thank you. Bye-bye.